Welcome. So today what I'm going to be showing you is just a simplified version of how I utilize DTFX using higher time frames in terms of market structure, and then zoning in to it from the weekly or the monthly, daily, to the 1 hour, to the 15-minute, and then to my entry. So let's get straight to it. First things first, you always want to start on your highest time frame, and you want to highlight any PD array that sticks out. PD array being a fair value gap, an order block, etc. You can call that an imbalance or supply and demand zone, whichever tickles your fancy. So what I'm highlighting here, very simple, this imbalance right here, and then what I need to highlight too is the high, and then what I'm also going to highlight is this supply zone, which is an order block or whichever, whatever you like to call it that. So then once I have that on my monthly, I drop down to my weekly, and I want to do the same thing. Anything that sticks out, anything that will be of use. So right now price is here, so I'm going to show you one example, but don't get me wrong when I say that, or don't get this twisted and think that that's just the only example. It's just to keep the video nice and short. But the point is, once you know how to do this, you can do this over and over and over and over again. And keep in mind, the only thing that differs here in terms of the DTFX, that this is not a scalping. This is not for scalping. This is for people that like to hold trades for 2 to 3 hours, slightly longer, sometimes the whole day. Sometimes you can even hold a move for the whole week, because I found a way to utilize the exact same method, but then for swing trades, because I don't like to be on the charts all the time. I find that, how can I say, it brings a little bit more anxiety to trading. So then, as you see, I've went from my monthly to my weekly to my daily, and now we are on the daily. And again, you are highlighting market structures or supply and demand zones that are going to be important for the future, or which is right in your face. You're not looking at things that have happened 6 months ago. No, we're looking at what is happening now. And I'm just highlighting those zones for you, and then I'm going to show you an example. So let's use, I want to say, last week's price action. We're within a monthly imbalance, weekly imbalance, and we had this daily imbalance. And very simple, what do I expect to see once price hits a higher time frame? A higher time frame is a daily, weekly, or monthly. Everything else is a lower time frame. So each time I refer to a higher time frame, just know that I'm referring to either the monthly, weekly, or the daily. So once we hit that, so I'm going to be looking at price right here. Right here, we're not going to go too far. And then trust when I say that these examples can be replicated and replicated. I'll try to get through to 2 or 3 so that we don't make the video too long. So right here, this is the 10th of March. So on the 10th of March, what would I do if price is coming down here for the first time? First things first, I jump down to my 1 hour. On my 1 hour, I'm looking for a displacement or a market structure shift. And how am I going to find this market structure shift? Well, the only indicator that I use is fractals. So as you see, it's Williams fractals. I'm going to switch it on now, and you're going to understand why. This is just to help anybody that's still a beginner. So first things first, what I'm waiting for is to see price create a break in structure, or market structure shift, or break of structure, whatever you call it. Once price creates that, I'm then going to be waiting for a tap, but I'm going to be very specific about where I want the tap. Secondly, what I'm waiting for is to see price create a what? A displacement of some source, creating a fair value gap. So we have two things that we're always looking for. One of the two is going to set up your setup. So then right here, 10th of March, price comes down, take out my zone, I highlight from the high to the low. So this is our protected low, that's our high right there. And then as you see here, we have the 30, the 50, and the 70. Quick, simple. So this is my fib. You can use anything literally from here to here, just to highlight those zones. So from the low, and then drag it out again and do that. Like, it's just up to you how you want to do it. Once I have that, what I'm looking for within here, it's either or. Once I have my zone, I need to check if there is a fair value gap. Clearly we didn't have a displacement up to the upside, or we did, but then we also broke structure. And while we were breaking structure, we left a fair value gap right there. And then we have our 30, 50, 70, and then obviously our first mark right there is just to be pinpoint. Once that happens, we have a slight market structure shift. I'll put an alert. Remember what I said now. In our zone, if we have a fair value gap, we mark our fair value gap. If we didn't have a fair value gap, then I was going to mark my what? I was going to put an alert at my 30 zone and then start paying attention from there. So, got it? Let's just move that for now. So from there, what I do is I drop down to my 15-minute. On my 15-minute, very simple. I'm looking for a breaker. Not a break of structure, not a market structure shift, a breaker. So if you know what a breaker is a pattern that looks like a break of structure. But then in reality, it's just a breaker, because why? A break of structure would be something like this here. We need to take out all these structures. In a breaker, all I'm looking to see is just a little minute change of structure when price has been doing a whole lot of other things here on the left hand side. We don't need to take out the complete structure. So it's good to know that difference and be very exact about it. So right here, price taps into our zone. Let's draw it out. Low, high, low, high, low, high. As I said, I'm looking for any kind of breaker. Not a break of structure, just some kind of break. What do we have here? We have a break. Immediately, what do I do? If I'm being bullish, the closest red candle, I put my entry, stop loss on the low, and then obviously, depending on your risk to reward ratio, you're going to aim for what you are aiming for. This is when it gets a little bit more complex. But when you're starting out, I'll show you what you can do. Simplest thing, you look to your left hand side. On your left hand side, you look if there are any fair value gaps. You look if there are any order blocks or supply zones, whatever you want to call it, imbalances. And then you also look for highs, since we are bullish in this case. And then within these zones, you can take your profit, and you will see what I mean. You don't want to be holding on forever. So from here, price, as you see, immediately, and as I said, as soon as we get our break of structure, this would have been my entry. Red candle, stop loss on the low. Let me just pull that up, and then we have this zone right here. So this is when now you have to know how to trail your stops. That's a video for another time. But as you see, within these zones, you are able to take note of when price changes direction and creates a breaker in the opposite way, which is what? A wink letting you know it's time to either move your stop really up high or close that position. Plain and simple. So another example. So now I'm adding a little bit of market structure. And what is market structure here? Anytime price is going to create a new zone. So I'm just going to remove this here so that we can just be clear and see what we're doing. So this is a high, still very important. We will keep that there. It's a liquidity zone. So price, BOS, taps down into this BOS, creates another BOS. So let's do this here. I'll remove that. And what do I mean by that? This is what I mean. Price does this, comes back to the breaking point, creates now what? Another BOS. So now that's what's happening, and that's what we are following right here. Very simple, very straightforward, nothing complicated about it. Draw it out to the future. Again, if there's a fair value gap, you highlight what? The fair value gap. And then you also you make note of your 30, 40, 50, and obviously the low in this case. So then, as soon as price taps into my fair value gap, what do I need to look for again? Opposing areas of liquidity that might try to what? Send price back down. So I know that those are my TP zones. That's how you work out your TP zones. Plain and simple. As soon as you get in your entry, you look on your left hand side. Whatever price has done, it needs to undo. So if I'm being bullish, and when I meet another green candle, it's going to have to go down and create a red candle. And if there's another red candle below that, then it's going to have some kind of support, and it's going to be able now to work its way through the green candle. I hope everybody's staying with me, and I hope everybody and I hope this is making sense. So we have that zone. Let's change that zone into fair value gap right there, and then we also have this order block right there. Very important to highlight all these things, and you're going to understand why. Because why? You want to see when to exit, you want to know when to enter, and you want to know where to exit. These things you need to work out before you get into your trade. As you see your setup starting to come to life, you start marking up your zones. Okay, at this point I might need to exit. So then we look at this perfect example right here. Price comes down, creates a breaker. So let's look what would have happened here. Perfect example. What would have happened? Would have gotten stopped out. Why? Because price went in deeper again. And what? That's the name of the game. No strategy is 100%. What do? Does that mean now, oh no, I'm on the wrong side? No, you calm down. You go back out. You look. You start from the top. Higher time frame. Do I have my higher time frame? Yes, I do. This daily fair value gap, weekly fair value gap, monthly fair value gap. It's all there. The blue, the green, and then the light green. And then we also have a 1 hour market structure that is building on the bullish side. That's number 2 on my checklist. So I know that we're still bullish. I was just too soon. That's it. Go back to your 15-minute. What do? You wait for that area to be swept. You wait for that area to be swept because why? It's just a small liquidity run. It gets taken out. Look what happens. Moments later, we get another breaker here. Price does not come back to our red candle, and that's going to happen. So this is when, with experience and time, you'll know when to be aggressive, and you will know when to wait. In this case here, price keeps on impulsing to the upside, but then what does it do? It creates an imbalance. That for me would have been a zone that I could have entered in right there. And what would I be aiming for? Halfway of this point here would be my start. And then what do? You monitor your trade. So as you see here, we came down into this fair value gap. Boom, boom. And what are we doing here? We are working out everything we do. We must undo. Price created this green candle. 1, 2, 3 red candles down. Traded back into this green candle. Now we must undo it. So we must trade back down again. Where are we trading back into? This fair value gap. You have all this area here. If price can make its way all the way down, it's going to bounce back up here and do what? Make its way all the way back up. It keeps going. You are watching it. What are you watching and waiting for? It's either it's going to create a break of structure here, no, a breaker, or it's going to sweep liquidity. What does price do? Meets our target point. What do we do then? We close the trade. We move off to the side. We see if it's going to come back again. And what are you waiting for if price is going to come back into a zone again? Make no mistake, it has to sweep liquidity. You have to wait for liquidity to be swept. Otherwise, what's going to happen? You're going to get trapped in. Once it's a liquidity sweep, it tells you, okay, we are just coming down for liquidity. Now we are going out again. And this is going to repeat. We are still back in the same zone. This is going to repeat until price works its way into another higher time frame where it changes the bias. And how do you know when the bias is changing? Simple. All you need is to just pay attention to your high time frame structures. My bad, I forgot this fair value gap. So then the same way when we are trading on the 1 hour, you need to look at opposing things that may give price some kind of hassle in terms of what has been done needs to be undone. We have this bearish fair value gap right here. From here, we are going to be trading into it. So this is our draw on liquidity. At this point here, as soon as price taps my draw on liquidity, I close my trade. And what do? So it was a bearish draw on liquidity. what would I be waiting for now? I'd be waiting for a bearish market structure shift or a bearish displacement to the downside. Plain and simple. Right here, it's hit. It comes back down again. So now, look at this. If price has hit this zone here, which is my daily fair value gap, and right here you would have taken profits, because why? This was one of our draws on liquidity on the 1 hour. It's been hit. After that, there, as soon as we tap into the zone, I'm going to be waiting for what? A BOS or a displacement to the downside. Do we get a displacement? Yes, we do. Do we get a BOS? No, we do not. And what do I mean by a BOS? A BOS needs to be clean, always for me. Candles need to close below. The candles did not close below, but what happened? We did get a displacement. And then at this point here, I would be looking for what? A market structure? No, a breaker to the downside. And all you need to do is you go down to your 15-minute, you open up your chart, you check. If anything of note is happening within that zone, if it doesn't happen within that zone, don't now try and just join anything that's going to happen outside that zone, because that's not our POI. That is not our point of interest, meaning it is not time, or price is just not bearish enough as yet. So what does that mean? No trade. You need to take off your boxes. POI. Your POIs and your zones and fair value gaps are the perfect POIs. If it doesn't happen within there, leave it alone. Don't force it. You wait again. Price comes back. Touches where? Our daily fair value gap. And what do we have here? We have a break of structure. Right here. Here's the high. Here's the low. Price is closed below. Look what happens. It comes back to where? Is there a fair value gap here? Yes, there is. Right there. There's a little fair value gap right there. And then you also want to make sure that you've highlighted your 30, 50, 70, and then obviously the high and the low. Nice and easy. Drop down to your 15-minute. On my 15-minute, what am I waiting for? In this case here, since the fair value gap does not fall in between the beginning of the break of structure, and like how it was when we were looking at the bullish setup, it falls in between the 30 and the 50. Still good, but then now it's even more amplified for me, because why? It's happening within the 30 and the 50 zone, so that gives me more confidence behind the move. Again, nice and simple, not complicating. What am I looking for? A breaker. Price. So that's a low, that's a high, that's a low, that's a high. Price wicks though. That wick, that's a fractal. I don't like to use fractals much, but in this case here, because we wicked into a what? Our 30 fair value gap and 50 zone, created a breaker. What did I say? You enter on the first order block candle that you see. In this case here, that was going to be it. And then what do? As soon as you've entered, you need to go back to your 1 hour, and then now you need to start looking at opposing areas that are going to give you some kind of problem, so that you know where to take your profits. That's going to be one of them. As soon as price makes its way through there, then where? Here is the next low. Go back to your 15-minute and you watch your trade. How's it going? Do you see any bullish breakers going back to the upside, that are challenging you, that are giving you some kind of? So price did try to do something, but see there, we did not close over that high. We're still going down, going down, going down. Target hit. Price finally, it swept liquidity, makes a high, makes a low, makes a high, makes trades even lower, and we only get our bullish breaker right there. But then that's not our setup, because everything needs to have a fundamental understanding. Higher time frame, BOS or some kind of displacement. Highlight your zone. Once you've highlighted your zone, if your zone has a fair value gap, highlight the fair value gap, and then you also have your 30, 50, and 70 zone. But if there's a fair value gap, especially if it falls within an area like this, so over here, I have to highlight this and you have to see it nice and clear. So if you have your zone like this here, and then your fair value gap comes before a zone, highlight the zone, because in most cases price is going to find some kind of support before it reaches your 30, 50 or 70. But then if your fair value gap falls in between here, you don't need to really worry about it, because then it's falling within your zone. So all you need to do is highlight, is put an alarm at your 30. And this is going to be very tedious at first. It's very slow, it's not fast. As I said, unlike the DTFX way, I'm not using it on smaller time frames. That's not for me. I'm using it on a longer time frame, which, yes, it makes less setups, less trades, but I win more and I lose less, which is good. It's not about trading more, it's about knowing when to trade. And I think that's about it. If I missed anything, if I went too fast over anything, you guys can drop it in the comment. And if you guys enjoy the video or find it some way educational, or something's just been unlocked because I'm sharing what I've discovered for myself, and if it relates to you, let me know, and then I'll be dropping more and more soon.